Good evening and welcome back to your favorite Friday show, Beyond the Deal, where we break down real estate, economics, and all the wild things happening behind the scenes that can change your buying or selling experience overnight. Today's topic is one of the biggest economic swings we've seen in years. President Trump is imposing tariffs up to 125% on Chinese imports. And trust me, this is not just politics. This could hit your wallet, your next home project, your investment portfolio, or your dream of buying your first property. Or who knows, maybe it's a complete opposite. So grab a cafecito and let's unpack together what's really going on. Let's get started. Before diving deep into how this affects the real estate world, we've got to talk basics, right? Because understanding what a tariff actually is sets the foundation for everything else. So here's the deal. A tariff is a tax that a government places on goods imported from another country. It's like putting a surcharge on foreign products as they cross the border into the United States. That money goes to the government, but the actual cost almost always gets passed down the line. So if you got a notebook or your cell phone, you can write this down. Tariffs are equal to taxes on imports, and taxes on imports are equal to higher prices for you. Let's say that a builder in Florida usually buys light fixtures from China for $10,000. A 125 tariff means that they now pay over $22,500 for the same order. That extra $12,500 doesn't come out of thin air. It either cuts into their profit or it gets added to the cost of your home. Now, why do the government use tariffs? This is important to know. There are usually three main reasons, and the first one is to protect local industries. By making foreign goods more expensive, the idea is that Americans will buy local instead. Number two, generate revenue. The money from tariffs goes to the United States government, helping fund public spending. In this case, because we're talking about the United States, right? And thirdly, export pressure. Sometimes it's political. Tariffs can be used to push other countries to change their trade practices. Trump's angle here is mostly the first and the third point that we just discussed. He wants to bring manufacturing back to the United States and reduce our dependency on countries like China. Whether it works or not, that's what we're here to explore. Alright, so what's the actual impact of those 125% tariffs? Well, the first wave hits construction material. Things like steel beams, copper wiring, light fixtures, bathroom vanities, even the electrical panels. All the things, or most of those materials, come from abroad, especially from China. With the new tariffs, builders say that they are seeing immediate cost increases of 30 to 50%, and some suppliers are just refusing to commit to pricing altogether. So let me bring this home. A developer in South Florida was halfway through a mid-rise condo project. In the middle of the project, they got a notice. Their lighting supplier had increased prices for around 80%. Why? Because the components were stuck in a tariff bottleneck. The developer either had to eat the loss or delay the project and redesign using more expensive domestic alternatives. Now, multiply that across thousands of projects nationwide, and you start to see why people are calling this a silent shock wave hitting the housing market. This is where it really hits home, like literally. The real estate market doesn't exist in a bubble. It's a living ecosystem, and tariffs threw a wrench into multiple gears at once. Here's how. Number one, construction slowdowns. Builders cannot price their projects with certainty. If your foundation costs 20% more than expected and your HVAC units are stuck at the port, what do? You pause, you scale back, you wait. And listen to this. Less construction is equal to less inventory, and less inventory is equal to higher competition for existing homes. Number two, price inflation in new buildings. That 450,000 new build house in suburban community, well, suddenly it's not 450 anymore. It's $490,000, an example. And builders are still squeezing margins because they are taking the hit too. In hot markets like Miami, Dallas, or Phoenix, where growth was booming, this could choke off momentum. Another point is renovation market freeze. Like, even homeowners looking to flip or upgrade are starting to hesitate. If your kitchen remodel just jumped from 40,000 to 55 because of imported countertops and lighting, you might cancel entirely. Another point is the impact on affordable housing. And this is a big one, by the way. Affordable housing developers, those building units for low-income families, work, for sure, on a tight margin. When costs spike due to tariffs, projects obviously get canceled or scaled down. Real estate investors usually hate uncertainty. And right now, the only thing that's certain is change. Higher costs plus longer timelines plus market volatility is equal to people holding cash instead of building. So yes, the effects are wide and they're fast. But stick with me because it's not all doom and gloom. I promise you. Now, here's where things get weird. Mortgage rates are actually falling right now. The 30-year fixed dropped to around 6.61%, obviously, at the time and day this video was recorded. Now, why that was happening? Well, because when tariffs scare investors, they move money to safer assets like government bonds. That causes yields and mortgage rates to drop. So, if you're a buyer, you might be saying, hey, this is good news. Yes and no. Why? Well, yes, lower rates can make homeownership more accessible, but those gains can be whipped out fast if home prices keep rising because of construction cost inflation. It's like getting a discount on the loan, but paying a premium for the house itself. Which one do you prefer? It depends on your situation. So, what do you do about all of this? You stay ready, and here's how. Stay updated. Don't just watch the headlines on the news, and please understand what's behind them. Follow economic reports. Know what policies are coming down the pipeline. A 125% tariff doesn't hit instantly. It creeps in through your contractor's invoice, your renovation estimate, and your mortgage pre-approval. Another thing that you can do or keep in mind, work with people who know what they're doing. If you're buying, selling, or investing, do not do it alone. Work with professionals who are plugged in. Your lender should understand market shifts. Your agent should know the trends before they hit the news. This is not the time to DIY your way into a six-figure decision. Absolutely not. Plan for delays and higher costs. Budget like things are going to get more expensive and not less. Have a contingency fund if you're building. Pad your timelines and don't fall for deals that sound too good to be true, because that might be based on last year's numbers, not this year's reality. Think long term, and this is very important, family. The real estate game is not just about what's happening this week, right now. If you're buying a home to live in 10 years, short-term fluctuations won't break you. but panic decisions might. So stay cool, stay informed, play the long game, and be patient. All right, so let's zoom out, because as chaotic as this feels right now, what if these policies actually work? Let's play out the optimistic scenario. If Trump's tariff strategy succeeds, here's what it might happen. So first of all, domestic manufacturing gets a comeback, right? With foreign goods too expensive, American companies might bring production back home. That means that more jobs in steel, electrical, even appliances. It also means faster supply chains, fewer shipping bottlenecks, and of course, more economic activity within our borders. Another point, more stable and local supply chains. Have you ever heard this phrase that says, make it where you sell it? If you start producing more materials locally, it reduces our vulnerability to international crises, pandemics, shipping shortages, trade wars. That's a long-term stability for a housing sector. Another important thing is that it might boost the national GDP and innovation. More factories, more jobs, more innovation. It could push the United States into a new industrial age, one where tech and construction meet to create smarter and more sustainable buildings. More jobs mean more home buyers, and more demand fuels a healthy real estate cycle. But, and this is a big but, by the way, all of this takes time. Policies like this do not flip the economy overnight. There is short-term pain, but if we play the long game, we might build something stronger. And that, family, is the hope. That this shakeup gives us the opportunity to build smarter, leaner, and more self-efficient than ever before. Trump's 125% tariffs are not just numbers in the news. They will potentially determine how homes are built, how much they cost, and how confident people feel about investing in real estate. But this moment, this challenge also brings opportunity, great opportunities. We're being forced to rethink how we build, where we source materials, and how we future-proof our housing system. So what can we do? What can you do? Stay informed, stay adaptable, and most importantly, don't panic. Be strategic. If you got value out of today's episode, do me a favor, hit that like button, leave a comment, and subscribe so you don't miss what's coming next. You don't really want to miss it. And if you're navigating this market and want someone in your corner, we're here. This is Beyond the Deal, where we don't just talk about real estate and you know it. We live it. I hope that whatever happens with you between now and the next time we have the opportunity to meet, which is going to be next Friday, if God wants, is absolutely amazing. Be happy out there.